And everybody, my name is Zoe Heller, and I am the Communications Manager at the Epilepsy Foundation of Eastern PA. It is my pleasure to welcome you to the fourth session of the Special Journey Solutions Navigating Key Options for Families with Special Needs webinar series. Tonight, you will learn about taxes in the IRS. You will hear from our wonderful financial planning expert, Susan Walter and Bruce Sham. Please place any questions you may have in the chat box, and we will present those to the speakers at the end of the presentation. So with that, Susan and Bruce, you guys have the floor.
Thank you.
All right, thank you. I just had to unmute. All right, so thank you, Zoe. Thank you very much, and welcome. So just to start off the bat, Bruce and I are not accountants, we're not CPAs, and Bruce can go into a little more detail about the material for the presentation, but should you have very specific questions, it's something for you to discuss with your professional, with your accountant or your CPA. This is information to give you vocabulary, some insights, some tidbits to take back to your professional so that you can look at your individual circumstances. So we've kind of talked over the course of the series so far. We've talked about life and financial planning, this special journey. We've talked about legal, and tonight we're kind of talking about accounting and tax. And this is kind of like that third professional that you've got in your toolkit that goes into that bigger picture of the disability planning. So because it's April, this still sometimes gives me the shivers, but we're talking about taxes, tax season, 1099s, 1040s, 1041s, K forms, ordinary income, deductions, capital gains, trusts, especially irrevocable third-party special needs trust. Who pays the taxes? What are the tax rates for a trust? Revocable versus irrevocable. Are there differences for those in terms of tax considerations? These decisions, all of these tax events inside of a trust. What happens when you sell an asset inside of a trust? Do you do it now or do you do it later? So all of these things are the big questions that get asked as you move along, sort of making the plan and answering those questions. So anyway, if you're like me, perhaps, it used to make my head spin. Keeping up with tax code and slogging through paperwork, actually, it still makes me sigh sometimes. But by learning tidbit by tidbit, consulting with an accountant or CPA with special needs experience, it can be very, very helpful. And not just at tax time, that month out of the year where you're just specifically paying and filling out your tax paperwork, but in tax planning as part of the big long-term picture. So I'm going to give you one example of just a really small thing that made me do a very audible sigh at one point. So when Henry, my son, started receiving SSI at 18, we needed to charge him rent. And little did I know, charging him rent was a taxable event for me and my husband. We're married, filing jointly. I had to claim rent as income because I was charging him rent. But I didn't, and I did this for 5 years. And then I met a CPA with some disability experience. And if I charged him lodging instead of rent, lodging's not a taxable event for me. And so here's the reason. Rent is a tenancy agreement. It's an exclusive possession of part of the property, and I wouldn't have access to it, locks and contracts and things like that. Board and lodging is an informal arrangement, which is what I have with my son. It's a license to occupy, no exclusive possession of property. There are no locks on the bedroom doors. It's like he's a long-term guest, and that is not a taxable event for me. 5 years, but I didn't know. Nobody told me, but it's just one of those things. Pick it up over time, and now I'm more knowledgeable. So that's my little case study. Don't risk what Susan did. You do what Bruce tells you to do because he's smarter at this. All right, so I'm going to hand this over to Bruce, and I'll let you get started.
That really is a great story, though, Susan. Thanks for sharing that. And many of the folks that we work with, we talk about that, the lodging, and and it is very hard to get your head wrapped around it. And it is difficult for parents to just think about charging their children rent. But you can even go one step further. And if your child is paying towards your cable bill or your Pico bill, and there's 4 in the household, and the electric bill is $200, I used to write a check for $150 to Pico, and then my daughter would write a check for $50 to Pico. So I never touched the money. I never even became part of our joint checking resource. And so, in the event that we were audited or we needed to show the accounting of what we did with her money, what we did with her SSI, it was very easy to just run a report, a list of the checks from her bank statement and have that. So, that is something that you can do as well. And again, we can talk about that, but let's get into the presentation. I'm going to share my screen. There's a lot of information. As Susan said, we are not accountants. This is a presentation that was written by the head of the accounting department at Arcadia University and the American College, from which Susan and I both got our designations from. And please, if there's something in here and you want more information about it, we can direct you to certain websites, but we do want you to talk to your accountants about it, please. Okay, because even even some of the things that we're going to talk about, if your income is at a certain level, it may not apply. It may only be applicable to a certain amount. So I think Susan said it best. This is just another nugget of information to put in our arsenal. And as we are navigating this journey, if you will, hopefully we'll get some benefits from it. So these are some of the most overlooked deductions and credits. And remember, there's a difference between a deduction and a credit. So often people don't realize that there are medical expenses, that they're missing. I know for years, I thought, with a respectable income and only being able to deduct 7.5% of our excess medical expenses above my adjusted gross income, how would I ever have any? It just seemed like almost impossible. And now that I'm well into, my daughter living independently and paying for her own housing and care and transportation, I was like, wow. I mean, it costs me $30,000 to $60,000 a year to keep her independent, and that is considered medical expenses. Even the apartment that we rent for her to learn how to cook and to clean and to live independently and to do laundry is eligible for that medical deduction. That can be huge. So please take that into consideration. I always say, just because our children are graduating from high school or their post-secondary program, our kids are learning at different rates. Many of our children were stymied early on due to just navigating their illness, navigating what's going on. And, ongoing instruction, that is something that is overlooked as a potential deduction. Impaired work-related expenses. Many of you have heard me talk about that when we're applying for SSI. And if there are any expenses that, because they do deduct $1 for every $2 that our children earn when they are working. But if it costs me $40 an hour to hire a job coach so my daughter can make $8 an hour, that's an impaired work-related expense. And that could also carry over to, I'm an adult with a disability and I need certain accommodations, certain help to do my job. Okay. And the cost for that, what I might be paying for that, is considered an impaired work-related expense, and that is deductible. So it's interesting how it comes back as our kids get older. There may be some expenses that we want to make sure that we don't forget. The earned income tax credit, there are credits for adopting a child with special needs, and there are, of course, the child and dependent care credits. So we'll get into that a little bit more as we go through the presentation. For those of you, I think everybody's pretty much familiar with a 1040. And, lots of changes have taken place over the years. Now we have a pretty respectable standard deduction for those of us who receive a W-2 and really can't itemize. The standard deduction is pretty respectable. But if you are able to itemize and you do have 1099 or self-employment income, you do want to look to see, am I better off itemizing? Is that going to give me, a better credit, if you will? Or do we take the standard deduction? Okay. Remember now that for taxes paid, we're capped at $10,000. We used to be able to deduct loan interest, credit card interest, got even interest on life insurance policy loans. None of that is deductible anymore. But if you are able to itemize, there are some interest expenses that you can deduct. Obviously, the medical expenses, but charitable contributions, something to keep in mind. Okay. So let's continue. As I said, the standard deduction for married filing jointly this year was $29,200. And you can see based on, head of household, single, or married, it keeps going down. Filing separately, okay, it keeps going down. If you are elderly or blind, and elderly means over 62, okay, there's an additional deduction. If you are legally blind and we're applying for Social Security, your benefits are almost doubled. So that is important. That's one of the first questions when we fill out the Social Security application is, are you legally blind? So that's something that's important to just keep in mind. Okay. So who may deduct these medical expenses? Obviously, the taxpayer can deduct them for themselves, their spouse, or the dependents. In a divorce situation, the parent who basically pays for these expenses, regardless of who is the primary caregiver. That's important to note if anybody is divorced. And then, of course, as we said, the eligible unreimbursed expense is deductible if they exceed 7.5% of adjusted gross income. And we will go into a couple of examples of that. Okay. Medical expenses include anything that is paid for a diagnosis, cure, mitigation, treatment, or prevention of a disease, or for the purpose of affecting any structure or function of the body, and transportation primarily for and essential to the above medical care. So you might have to think, I mean, I keep very good records, but these are things that you really do need to think about as you're getting your taxes together. What may have been overlooked? We may not have thought about special schools that our children may have attended and incorporating that. We may not have thought about some capital expenditures that we might have had, one-time expenses that we might have had that can count. Okay. I know for years when, the Epilepsy Foundation had their national conference, actually, I was there at the, I guess the hotel has changed. It used to be I think the Hilton, now it's the Alloy. We had conferences there. People came in from all over and stayed. A lot of these things are deductible, are expenses that you can include on your taxes as medical expenses. All right. Any improvements that you might have to make in the taxpayer's residence or office? That's what I mean when I said it's going to come back as we get older. There may be some things that we need to do so that we can be successful in a work environment. Okay. And the deduction is permitted to the extent that the medical cost for the improvement exceeds. This is very, very important. And there's a nice example here. If I have to put in a new air conditioning system or air filtration system, child suffering from respiratory issues. So the house, by putting in this new $17,500 system, actually increased in market value by $7,000. I cannot take the full $17,500 deduction. I can only take $10,500. And again, It's not a full deduction. It can be deducted as a medical expense, okay, before applying these adjusted gross income limitations. So these are nice things that we should be aware of, that we can take advantage of. Again, if you do have questions, please put them in the chat. If we do not know the answer to the question, we will get you the answer to the question. But again, there's a lot of things that are going to come out of this presentation that I know people will be interested in learning. A lot of situations with our children is how do we remove barriers, right, that could be hurtful to our children, and what costs may be associated with that, with making those changes. Are there ongoing costs and maintenance? You know, if I have to put an elevator in my house, things like that, there's going to be ongoing costs and maintenance. And these also are deductible as long as the reason for the capital expenditure still exists. And as long as the reason was for medical improvement for our child or for ourselves, it could be for any of us, right? So again, these are costs. This is another example that can be deducted as medical expenses before applying the limitations. Changing entranceways, adding ramps, widening doorways, altering bathing facilities, lowering cabinets, lowering counters, and maybe adding additional railings, okay? These are all legitimate medical expenses. Again, other things that may be overlooked, anything that we are paying for extra for therapy, behavioral services, right? Any of these additional psychologicals or psychiatric services that we pay for, new neurologicals, we're required to get a new neurological IQ testing. These are all eligible medical expenses. I know from having attended a lot of the autism conferences, the pharmaceutical vendors are there selling their vitamins and selling right then and there. I mean, you know, these are all deductible expenses. Equestrian therapy, play and music therapy, drama therapy, any therapy animals, special diet foods. And you know, for those of us whose children are taking these special foods, they can be pricey. Much more expensive than the normal costs. And again, we reference medical conferences and seminars and special schools and other programs. Let's see. Okay, so special school instruction qualifying as a medical expense deduction. The education must be incidental to enabling the student to compensate for or overcome a handicap. That's what they mean by the education. It must be helping our kids to overcome a handicap, okay? The nature of the service is going to dictate. This is where it does get a little hairy. The nature of the services provided by the organization determine whether they are eligible, okay? The IRS considers medical facilities and therapeutic orientation as critical factors for the deduction. So I think this is probably the better example. A school that teaches Braille or lip reading, that trains physically and intellectually disabled individuals, including children with learning disabilities. They are teaching a skill, a specific skill to overcome the handicap or to be able to live a more normal, and I hate using these words, handicap and normal, but to live a more functional life, right? These are the types of things that they do consider eligible. Okay, and now this doesn't like me anymore. I'm stuck, Susan. It's not letting me move forward.
I will pose the question while
okay.
you see if you can get it, the
Okay,
presentation.
I did get it.
Go ahead. The question came.
Okay, why don't you ask the question? Let's just see.
All right. This is from Lisa. In terms of lodging, how much do you charge? There are 3 people in the home, so the
Yep.
SSI recipient is paying 1/3 max. Do you charge it? Do you have to produce a letter or informal agreement? And I know it can be a slightly squishy,
Yep.
topic.
So this is a really good question. Some social, and it's interesting, even though Social Security, and there's some of you on the phone, on the call right now that we've just done this again, because each office of Social Security, whether you're in Reading or Quakertown or Norristown or, wherever you are, they sometimes have their own forms. In Montgomery County, we have a lodging letter that we use, and it's usually often accepted. Now there are actually forms from the Social Security website that they request that you fill out. But I want to answer specifically the question. Sometimes, okay, I mean, if we are living in a home where we're paying $4,000 a month, $5,000 a month for a mortgage, and there's 3 people in the house, there is no way that our child can pay 1/3 of those expenses, nor does Social Security expect them to, okay? So in a situation like that, what we're looking at is how do we relate the square footage of their room, use of your kitchen, bathroom, and laundry facilities, okay? If we were going to rent a room in somebody's house, what would that cost? $600 a month, $500 a month. Okay, this is really reasonable. Remember, our kids are only getting maximum like $943 if they give you the extra $300 for living at home. So, it's pretty hard pressed to charge $700-800 if our children are only getting $600, but we can charge $600-700 if they are getting the $940. Now, for those of us who may be a little bit older on the call, and I know there are people on this call whose children are getting DAC benefits, disabled adult child benefits, and they would be getting half of the parent's Social Security. So if my Social Security is $3,000 a month, my daughter will get $1,500. Well, if my daughter was living in any of the group homes or any of the state-run facilities, her rent would go up to 70% of her Social Security. Right now, 70% of the $900 is what they would typically take. Or when she's getting $1,500 or $2,000, $1,700 is a good number. For those of us who don't have mortgages and are just paying real estate taxes, and it's more, reasonable. If my real estate taxes are $6,000 and there's 3 of us living in the home, right? That's $2,000. And if I divide that by 12 months, that's $166. Okay, that's way under market value, right? To rent a room in my house, right? So, usually we look at the room itself at around $425, $475. Again, it could easily pay 1/3 of the electric, gas, water, sewage. That part is pretty easy to identify. But when you're looking at the actual room, look at the square footage, look at your taxes, look at what your mortgage is, and try to allocate that square footage. What percentage of the total payment would represent that child's room and other facilities? Okay, I hope that answers the question.
Sure. And can I add, Bruce, like
Yeah, please.
when we moved to the Philadelphia area, when we finally purchased a home, we did our intake with Social Security. And the question was even not that specific. Do you charge my son, do you charge him a market rate?
Yep.
Honestly, I don't know what the market rate would be, but
Yeah.
we come up with something that's sort of reasonable. Yep.
That's where I said, like the $400, $500, $600,
Exactly. Yeah.
right? But again, you were lucky that that's what they asked. You know what I mean? Like, so there are some counties, like I know in Bucks County, they are adamant that that child cannot afford 1/3 of your housing costs. There's no way. And that's the end of the conversation. I mean, it's ridiculous. And we have to appeal it, and we have to appeal it. But I've experienced that, for some of these big homes up in Buckingham and Jamison, Pennsylvania. they're adamant, and then you got to go back and show, no. And then they'll say, well, would you charge that to anyone? And you have to say yes. It's not that we're just doing it because it's our child. That, like Susan said, that would be like a market rate. If you are renting a room in somebody's home, that would be a respectable cost for using the water and getting the benefit of the air and the internet and all those things. Okay. All right. Back to the special schools and the deductions. Again, the tuition itself is what is the deductible medical expense, okay? And any other expenses that might be associated with getting our children to school. Now, I always say that while our kids are in school, the school district, your local school district is responsible for transporting. Even if you are in a private school, and a lot of times I'm telling the families, look, especially as you start to graduate, if you're in a private school and only goes through 12th grade, they don't do a +4, but our children are entitled to stay in school till they're 22. We do need to re-engage the school district and see what options and what programs they may offer for our kids. And they will provide the transportation. That is one of the biggest things as we get into transition in some of our later lectures, okay? That as a parent who has lived through this, and I guess we all experienced it during COVID once things shut down, but I always used to say when that school bus doesn't come, those are the days that I would worry about the most, because I now had to keep my daughter occupied from morning to night, right? And how our kids are so regimented and everything has its order. And you know what? Our lives aren't always like that, right? Like, anything could change on a dime, and we're used to being able to adapt. But transportation, any of these additional expenses will all qualify as a medical expense. But please, make sure that you're taking advantage of anything that you're entitled to while you are entitled to it. Another thing, not to get too off topic though, but I'm learning, and one of the lectures will be on, when we talk about waivers and things like that, there are more and more things that are coming up. There's now a special Uber service. Now, I've been fighting for 9 months to get it covered under my waiver, but that's a lot better to me than CCT or Transnet, because CCT and Transnet can come early, they can come late. If you're not there when they come, they're allowed to leave. This really scared me with CCT. A personal Uber that's coming just for my child will wait for her. I'm very excited to see how that works. Hopefully we'll get the same person and we'll begin to build a rapport with them. But again, these things are ever evolving, and there's just no manual out there for us as parents with all these resources, right? It's just things that Susan and I are constantly gathering for our families. So I hope that was helpful, and we are stuck again. Did you want to ask another question, Susan?
I do not. Wait, did you just go through? Did it work?
I did get through.
Oh, go ahead then.
Some of these I'm not sure why they're showing up, because they're so intense, and I really feel that these are things that should be discussed by an accountant. I thought that I had hidden some of these slides. This is very important though. Like I said, the neuropsych reports, any additional testing that might have to be done. Often if the school district is not willing to do an updated IQ test, we might have to do it. But these are all things that can count as medical expense deductions. Let's see what else. The entire unreimbursed cost is a medical expense. If the children lived at the school, any meals that we pay for, we talked about transportation. If it's not provided, any additional incidental educational costs, if there are trips, travel, and any additional supervision, care, or treatment that they might be receiving while they are at the school. it's all part of these qualifying medical expense deductions. Yeah, I think we talked about this. This contradicts itself. They'll say meals and lodging are not deductible for conferences. But then on the next slide, it's going to say that $50 is deductible. So again, I encourage you to talk to your accountant about this, because I found that to be contradictory, right? Here it says lodging costs, but not meals, up to $50 a day are deductible for the taxpayer and one additional person if an overnight stay is necessary. And I think, Susan, we both experienced that if we're away for medical, I've found that the whole thing is covered, you know? So again, these are things that we discuss with our accountant, you know, especially if you're going out of state, right, for treatment. Here they're saying both the transportation and the lodging for each individual is deductible. Maybe what they're saying is that's deductible as a medical expense, and then you still get your 7.5%, right, for excess. I think that's what they're saying here.
And notice too, I think it's always interesting that the mileage rates
Yep.
change year to year.
There's two different ones, and they actually went down this year, right? It was 22 cents a mile. Now it's 21 cents a mile. But if you go on the IRS website, it says it's 65 cents a mile.
Right.
So again, there's lots of contradiction here, and that's why, again, here, look, it says it right here. 21 cents a mile this year, but last year was 22 cents a mile. You know, Susan and I always talk about this, you know, like so many things, they do go up, but certain things stay the same or go down. That $2,000 resource limit has not changed, right? Our kids are allowed to earn more, right? We are allowed to have more, but you can't have more than $2,000 in an account in your name. How is that not something that's going to increase a little bit? It just is baffling to me. Okay, again, though, our hope with this presentation is that there are things on here that are so obvious that you didn't take advantage of that it could really make a difference. Okay. I guess the other thing that I want to address while we're on the subject is, and many of you I've talked to about this, if our child's sole or primary diagnosis is the seizure disorder, okay, and they didn't get into the school district through the ID channel or early intervention, maybe the seizures started a little later in life, and they weren't, I'm finding more and more families are telling us that their child does not have Medicaid. The child does not have Medicaid. And, you know, I know a lot of people think it's just a terrible thing to have Medicaid, but Medicaid will pay for deductibles. It'll pay for medication that's not covered under the traditional insurance. It'll cover copays. And we know how expensive some of these medications can be. If you have the diagnosis and your child, we should, again, depending on the age, if our children are over 18, they're going to be subject to a resource limit to receive and maintain Medicaid. But if they're under 18, it's really based on diagnosis. It's not based on the parent's income. It's based on diagnosis. And so often when we are able to get the family the Medicaid, wow, that's like a huge influx of additional money that you would have to help offset some of the costs. Maybe it would help you be able to hire an attorney to set up a special needs trust, to get your wills up to date. It might help you with other care that you might want to acquire. Again, if that's something that you don't have, please reach out to us and ask us for help on how to do that, because it really will make a difference for your child. And I know that, you know, there are, yes, Susan, go ahead, please.
Just before you go on, Robin asked a question. What is a resource limit for children over 18?
Oh, it's still $2,000, which is what I was saying. It doesn't go up. It's still $2,000. If you're married, they're allowed $3,000.
Right. So the $2,000 limit was established in 1989, believe it or not. So looking at the present value of that $2,000, it's closer to it's just a little over 4,700 in 2024 dollars.
The
Just to give,
actual value of that, right? That's what you would have to have today,
yes.
right? Yeah.
So I'm not
And
saying
Robin, I know that, you know, when you look on the Social Security, if our children are now getting Social Security disability, it will say they're allowed to have $8,000. But if they are getting Medicaid waivers, if they are getting waivers, then it goes back to 2,000. It's very, very confusing and contradictory. If your child is never getting waiver and your child is just getting Social Security disability, yes, you are allowed to have $8,000. But this is why we talk about ABLE accounts, which allow our kids who are working, some of our kids, God willing, are driving, if you know their seizures are under control. And the ABLE account allows you to have 18,000. Depending on where the money is, the type of account, how it is titled, it does change what the resource limit is. But for the child themselves, on the 1st and 30th of the month, there better not be more than $2,000 in their name. In the middle of the month, and Robin, you've seen this, you know, when if you get some back payments or things like that, when we got the COVID payments, we can have more than 2,000 in the account, knowing that in the next day or two, it's going into another vehicle. But on the 1st and 30th, that's when they typically look at the accounts. And I have it linked up like clockwork that the minute my daughter gets her Social Security and she gets paid, she's always over 2,000. And I move the money that day into another just regular bank account that's titled in the name of my special needs trust, so that I can then move it into the investment or the, you know, an account that's going to earn more than just a savings account.
just to
I hope
piggyback,
that answers the question.
just to piggyback on that, John asked the question, is a DAC person allowed up to $8,000? But I think you need to repeat that caveat about
Yep, he's
Medicaid.
allowed $8,000 while he doesn't have Medicaid. But if we're applying for Medicaid, we don't, that's the first thing they're going to look at. And if they see that there's more than $8,000, it's going to be an automatic decline.
But
So
it's 2,000 for Medicaid.
it's 2,000 for Medicaid. Remember, just because he's getting the DAC benefit, we're trying to get Medicaid, right?
Right.
So it's 2,000 is the resource limit. And that's why when I had mentioned, I was very adamant when we get the DAC benefit, if our children are living in any type of state residential program, to the person who asked about what's the number, it's 70% of their benefit is what would be taken if they were in a state-run program. So I beg you, just keep in mind, keep mindful of that $2,000 limit if the children are getting Medicaid. If they're not, it is 8,000. Look, I have some attorneys that tell me if I'm getting Social Security disability, I've worked my whole life, I just had a terrible car accident and I'm brain injured, I can have $10 million in my bank account if I'm not getting any other benefits. But for our kids, if they're just getting Social Security disability and they're not getting Medicaid, it's $8,000. But it's $2,000 if our children have Medicaid or waiver. There's a separate number for waiver. Okay, and again, I can send out, we can send to Rena and Zoe, there's a chart from the government as to what those limits are. And I'll gladly send them over so that you can see that.
I'm going to interrupt you just really quick to give a definition. So Robin asked, what is DAC, DAC, disabled adult child? So that's someone who is receiving a percent, 50% of the parent's Social Security once they're retiring.
Right.
Right? Yeah.
Hmm.
There was one last little question. Oh, I think this speaks to what you were talking about on the 1st and the 30th of the month.
30th. Mhm.
Does it apply if you get back pay for SSI? Should it go direct into a trust or ABLE account? So asking about the diversion
Yep.
of the excess funds.
So that's why I said they do allow you 6 months to move monies that you may have received in back payments. So, but again, and again, when we work with families, we anticipate it. We want to have these accounts set up so we don't have to go and fight it. You know how difficult it is. Many of you have sat with me. We've been on hold with Social Security for over an hour and 20 minutes. Okay. Let's not have the problem. Okay. You know what I mean? That's what we're trying to do, to avoid the problem. You know, they do allow you to hold on to it for 6 months before, you know, it becomes and often it'll say it in the letter that you get. But if we know we have to move it and we know we've applied, let's get the accounts in place so that when we get the money, we can move it, right? There's no point keeping it in a no interest checking account anyway. You know, I don't know why we would want to leave it in a no interest checking account. We want to get it into our ABLE account. And again, we could talk for a moment, you know, why aren't we putting it into the trust? Well, trust pays the highest income tax rate. Why would I fund that if I have a ABLE account that is tax-free, grows tax-free, comes out tax-free, and I can put up to $18,000 a year into that? Not to exceed 100,000. Okay. But here's where, for John, if our children are not receiving Medicaid, you can have up to $511,000 in an ABLE account. But if they are receiving Medicaid, it's capped at 100. And the minute it goes over 100, Medicaid, SSI stops. There's a lot of masters. I still think that the system just doesn't have their act together. It makes no sense. Okay. What many of our families are experiencing, where their children are losing their benefits when they go on the disabled adult child benefit, and they're losing their Medicaid because now the government's saying they make too much. But then there's statutes that say if it's a DAC benefit that is disqualifying you, it doesn't count. And if they have a special needs trust and the government is the beneficiary of that for payback, and we're putting this extra money in the trust, that's how we're going to work our way out of it. But it's very, very disjointed. It's very frustrating. But again, this is really why I changed the trajectory of my practice to help other families. Because again, nobody handed me a roadmap when they told me about my daughter when she was 19 months old. And I just felt that everything that I had dreamed and hoped and wished for her was just one at a time, just taken away from me while I sat there. You know, and there's no roadmap. And that's what we're trying to create.
There are a couple of questions, but I think I'm going to hold them until we get towards the end. Just
Okay,
so
I
that
think we are getting close to the end.
Okay.
This is important again, for those of us who may have older kids who are working. And again, you know, there are different types. Remember, I said there's a difference between a deduction and a credit, and there's a difference between a business deduction in lieu of the medical deduction, which must exceed 7.5% of your adjusted gross income. If I require, and many of our kids require a nurse, right? We require somebody. If I am now, and Susan, if I may, you just use Henry, for example. Henry's going to work. He's going to go, he's in college, he's going to work, and maybe we need to send a nurse with him to work. And you have to pay for it because he doesn't get Medicaid. Okay. At this point, he's making too much money, right? We may look at, is deducting the cost of this attendant care service, okay, so he can work. Is it better to take this as a business deduction or a medical deduction? So it's something for those of us with younger children to just sort of be thinking about, as our kids get older. And I know that many of us have our kids working in our own businesses, right? Many of us have paid our kids to work in our businesses, right? So, but we're still running our business. What additional expenses might we have so that our children can be successful? Many of you know that I fell in love with, oh God, the name's going to escape me. The couple that built, in Paoli, they built the company so that their son with epilepsy, the entire place is covered with the soft rubber mats. Everybody comes with their service dog. I mean, they made that facility so that their kids could be successful and thrive. And oh, Susan, I have their picture hanging outside your office on the wall there. Louise Baker Industries. I fell in love with them very shortly after I started working with the Epilepsy Foundation. And so again, think about, the business deduction in lieu of the medical deduction. All right, let's see. And again, we talked about, many of you have heard me talk about impaired related work expenses with Social Security. There could also be impaired related work expenses when it comes to going to their job. Okay, going to their job. So again, this starts to get a little deep. Again, I'm not sure why. I felt that these slides, Susan, were a little over what I wanted to address tonight. There are credits for adopting children with a disability. I know that many families have adopted children that are not United States citizens initially. I needed to get more clarity around this as to, this is talking specifically that they are a citizen or resident of the United States. It didn't address if the children were adopted outside the country. So I didn't feel that I was going to spend a lot of time on that tonight until I had that information. Okay. Okay. These are, again, just more examples of how the credits work. And if you're reading through the slide.
See, to me, these are great examples of when you're meeting with your tax professional.
Yeah.
You can start kind of bullet pointing, what about? So you just start asking more educated questions.
Yeah. Yeah, but I felt this was a little over the top, for what we were trying to do tonight. I think I'd much rather answer, and we are at the end. And again, this is just echoing what I've been saying. It is very important to speak with your tax and legal advisors for some of these very specific things, how they apply to you, and if you can take them as the deduction. I mean, when I was told that my daughter's apartment, the rent for her apartment qualified as a habilitation facility because she is there for these specific functions, that was a game changer. That alone got us eligible to exceed the 7.5% of AGI. Because if your rent's a couple $1,000s, I mean, that's $24,000.
Right.
That's a game changer.
And I
That's
think a
not
lot of
21 cents a mile for me to go to the doctor. Go ahead, Susan. I'm sorry.
Oh, no, it doesn't sound logical to think of rent being a medical deduction. So yeah. And yeah, that can be really confusing in a way, but that's why having these broad discussions and throwing out fairly obscure information, getting more comprehensive. Yeah.
Social worker insisted that my daughter needed to be independent, that for my daughter, her living alone was the highest level of aspiration that she could have had. And when her roommate left and I got scared and I brought her home, she fell apart. She must have gained 40, 50 pounds. I mean, she's only 5'2". I mean, she got so depressed, and the social worker kept saying, Bruce, you took away everything that's all she had was her independence, and you took it away from her. So as hard as it was, and some of you know me well and know that it wasn't easy to move her back out on her own, but she's thriving now. And, that was the leap of faith that I had to take. But that's when we found out about that this is really a habilitation facility that's teaching her and keeping her to be independent.
Okay. I'm going to start with John's question here.
I'm going to stop sharing the screen. So, well, I guess we still can't really see anybody. Right?
We can't see them, but they can see us. We're
They
just
can see us. Okay.
All right. Is it worth having an ABLE account? And that comes with so many, it depends, but it's always about these choices, right? Between an ABLE. So I think when John is asking, it's about being able to shave off those, charging the rent, shaving off any of the excess, and you can put it into the ABLE account. You can put it into a first party trust if it's the
The ABLE account is the easiest thing. It takes 10 minutes to open. I mean, John, I'll go on the PA ABLE website with you and share screens. It takes 10, 15 minutes to open. And I think the hardest part of it is getting it funded initially, because you've got to decide what allocation you want. And do you want to send in a check, because maybe you don't have the money in an account that's linked to it. So they give you a coupon that you can mail it in. But I mean, the ABLE account is the first account that we look at if we're applying for Medicaid and the child has more than $2,000. Look, if you spoke to me before 2014, we were buying cemetery plots with the money, okay? Because that was an allowable expense to prepay a funeral. ABLE accounts didn't exist prior to 2014. And even then, you couldn't find one. There was no state accounts. There was no accounts with a few financial institutions do have them. We work with the American funds. They have them. I think Vanguard might have one. Okay. But you got to look at the costs, and you got to look at, how accessible is it for you? The PA ABLE account, where it's linked and your kids get a checking account or they get a debit card. When the money is tied to an investment account, you can't be calling the company every 5 minutes that I need $5 for a tuna fish sandwich, right? But you can use the debit card to buy that tuna fish sandwich at Wawa, the tuna hoagie. So, I mean, I think the ABLE account is one of the greatest things that the government has done for us. And you do get a state deduction in Pennsylvania. And Pennsylvania has a ruling that it is not a payback. Whereas I know when Mr. Feldman spoke a couple of weeks ago, he said it is a payback, but in many states it is. But in Pennsylvania, it is not.
And it has to do with residency. Yeah, it has to do with your residency, correct?
Yes.
Yeah.
It has to do with your residency, but I can be a Pennsylvania resident and have an American Funds account, which is a Virginia trust. And because I live in Pennsylvania, I'm entitled to the state tax deduction.
Right.
These are things that I know absolutely are correct.
So yes, it's paperwork. I do one lump sum distribution into Henry's ABLE account per year, and it involves a little FedEx envelope and some extra paperwork, cost basis information because I'm doing a rollover, but I do it once a year and then it's there. It's super there. I have it linked to 2 accounts. So I can put the money directly into Henry's account, or I can put the money directly into my account if I'm reimbursing myself for something. It's really that simple. Just doing it.
Can we answer Lisa's question? Because
Go ahead.
About how to avoid jeopardizing Medicaid, we have already. How do we receive the SSI back pay? Unfortunately, that's a really tough one. If you've lost it, I've appealed it. It's going to be hard pressed to get it back. We can protect it from happening again. The families that we, I've had it go both ways. I had one family where we contested it. We opened up the ABLE account. We opened up the first party trust. but I've had many, many other families that say, okay, Bruce, that's great going forward. But at this time, there was more than 2,000, and I'm sorry, you're not entitled to that money. And they can charge you back. I mean, I've seen people get charged back over $21,000 in overpayments, and they're not getting it back. They're not getting it back. And I mean, you can appeal it and appeal it, but the most important thing is to not have it happen. The one that we did just win was the family had put the money in the third party trust, not the first party trust. And we sort of fell on the sword and said, okay, we made a mistake, but here you can see the intent was to put it in the trust. And so Social Security did condone it. I have no problem trying, Lisa. But again, these appeals have to be filed within 60 days of it happening. So, I mean, if we're past the 60 days, unfortunately, this is going to be very difficult. But we can certainly make sure it doesn't happen again in the future. I think we answered Robin's question about DAC. Are there any others?
Nope, that's all I have. And we're approaching 8 o'clock.
Yeah.
Oh, Lisa's saying she doesn't want to lose it. She still has Medicaid. I don't want to lose it. So
Oh,
that's
good. So then that's what we have to do. We have to, I mean, if you want to reach out to us offline, we can help you set up the ABLE account, or we could talk to you about how to set up a special needs trust.
Yeah.
Absolutely. Oh, good. I'm glad you didn't lose it, because once you lose it, it's very hard to get back.
All right. Does anybody else have any last minute questions for Bruce or Susan?
Hey, I know it's not easy, but that's why we're here.
Yeah, this was a tough topic. I hope we've given you some nuggets to work with.
Awesome. Well, thank you so much, Bruce and Susan, for joining us, for your time and your expertise. And thank you to everyone for tuning in tonight. Don't forget, our next session will be Thursday, May 2nd at 7 p.m., where we will discuss talking about government resources and benefits. You'll use the same Zoom link that we used tonight. And that's it. So have a great night, everybody.
Good night. Good night.